Asian stocks tune worldwide shares lower. US CPI in Cognizance Beijing, Hong Kong. Asian shares tracked Wall Street lower on Friday, at the same time as the greenback hung on to its in a single day gains, after rate hike steering from the European Central Bank and upcoming US inflation statistics unnerved traders. MSCI's broadest index of Asia-Pacific shares out of doors Japan fell 1.2% in early Asian alternate, weighed down via drops of 1.5% in Hong Kong, 0.8% in resources-heavy Australia and 1.6% in South Korea. Japan's Nikkei fell 1.2%. Tech giants indexed in Hong Kong were hit hard, with their subindex opening 2.9% decrease. Hong Kong shares of Alibaba NYSE, BABA, fell 3% after associate Ant Group said it had no plan to provoke an initial public supplying. This became a response to media reports that Beijing had authorized relaunching the IPO. Alibaba shares within the U.S. slid 8.1% in a single day. Market sentiment in China has been soured with the aid of renewed regulations in Beijing and Shanghai as new COVID-19 instances have emerged. Multiple districts in Beijing are shutting down enjoyment venues, at the same time as most citizens in Shanghai are dealing with new rounds of mass trying out to save you a new outbreak. On Thursday, the European Central Bank ended a long-running stimulus scheme and stated it might supply next month its first hobby rate upward thrust for the reason that 2011, accompanied by using a doubtlessly large pass in September. While the ECB selection was widely predicted, the possibility of a larger rise in September weighed on sentiment. The Euro region economy is grappling with slowing growth and soaring inflation exacerbated by way of a months-long Ukraine warfare. Global equities came below stress after the ECB brought its guidance, and ECB President Christine Lagarde mentioned upside inflation risks, stated analysts at ANZ in a note on Friday. And with energy fees still pushing higher, it isn't yet clear that inflation has peaked. Fed guidance and coverage movements may additionally have to turn greater hawkish for longer. Financial markets are fearful. For months, markets have centered on how speedy critical banks had been moving to lessen inflation. Investors now expect the Federal Reserve to elevate hobby prices by way of 50 foundation points next week, specifically if U.S. purchaser rate statistics on Friday confirms expanded inflation. The consensus forecast sees a year-over-year inflation rate for May of 8.3%, unchanged from April. Shares on Wall Street tumbled because the marketplace awaited the price statistics. The S&P 500 and Nasdaq fell extra than 2% in their biggest daily percentage declines in view that mid-May, with megacap growth shares main the way. Apple Inc. Nasdaq, AAPL, and Amazon.com Inc. Nasdaq, AMZN, fell 3.6% and 4.2%, respectively. While some investors have been hopeful that inflation may additionally have peaked, a latest run higher in oil fees to a 13-week high has dented that optimism, boosting the attraction of the safe haven greenback. In forex markets, the US dollar retained its wide power towards a basket of important currencies, soaring round its maximum stage in 3 weeks. The euro wallowed at a 21/2-week low whilst the yen gained 0.16% towards the dollar, pulling away from a 20-year low. On Friday, actions in U.S. Treasuries have been largely muted. The yield on benchmark 10-year Treasury notes rose slightly to a few 0.0566%, as compared with its U.S. near of 3.042% on Thursday. The 2-year yield, which rises with buyers' expectations of better Fed fund fees, touched 2.8319%, in comparison with a U.S. near of 2.817%. Oil charges dipped after components of Shanghai imposed new lockdown measures. Still, robust profits in refined products supported crude charges close to 3-month highs. U.S. crude futures fell 0.16% to $121.33 a barrel, and Brent settled 0.2% decrease at $122.81. Gold edged down on Friday and headed for a weekly fall, as Treasury yields rose. Spot gold became traded at $1,846.4949 in line with ounce. GOL.